Bitcoin is down 50% from its all-time high. While everyone is scared and the fear and greed index is in the low teens, two of the largest asset managers, have both come out with bullish predictions for the rest of this year on Bitcoin. One of them literally called the Bitcoin bottom right now from their CEO live on CNBC this week. And the other firm has potentially called out a super cycle. So I really wanted to take this opportunity and use their words to try to get you guys to buy more Bitcoin and really just discuss this from a fun way and really look at what these institutions are saying while Bitcoin is cheap. And let's look into it. So the two firms that we'll be mentioning today are Fidelity and VanEck. So Fidelity manages $4.9 trillion assets under its management. And they have just published a report saying that the Bitcoin 4-year cycle is probably over. Not in the sense that Bitcoin is over, but they actually believe that the cycles no longer exist and we will have a slow but steady super cycle. Pretty nuts. On the other hand, VanEck, they still believe deeply in the 4-year halving-driven cycles, but the CEO of VanEck actually came on live television and called Bitcoin to be a bottom. So I'm going to show you both of those posts today. First of all, let's look at the case of Fidelity. So here is Fidelity's latest report on Bitcoin. And this is actually pretty in-depth, published on February 24th, just 10 days ago, talking about the Bitcoin 4-year cycle and whether it is over and whether we are in a full-on super cycle from now on. So here is their main argument. Both accelerated in terms of how quick this drop came in the first few months of the bear market, as well as how the volatility now has been pretty low from January until early February, early March now. It's been holding pretty steady at this range. So Fidelity puts it into perspective with a couple charts. So first of all, they covered how the Bitcoin fundamentals have changed. In the last 3 cycles, Bitcoin was driven by speculation, by retail, but really in this cycle, it's heavily driven by institutions. So the sentiment shift in 2025, driven largely by the US as the digital asset sector became a focal point for the current administration. And specifically, they highlight how there are governments, exchange-traded products, and public companies that are the main buyers of Bitcoin. Now, you can track this very easily using something like bitcointreasuries.net. This covers everything, your Michael Saylors of the world, your ETFs, your public companies. And then here's how I would present this. So when you look at this, these are all of the entities that currently hold Bitcoin. And when you map this over the last 4 years, you see that who are the main buyers of Bitcoin as the price have gone up from 2022 until 2025. Well, the private companies, the DeFi and smart contract holders, and then the exchanges, these have not gone up that much. Aside from a big increase in late 2022, nothing else have driven much of the Bitcoin price action. You see, from November 2022, these 3 types of entities held around the same number of Bitcoins. However, when you look at the other 3 segments, first let's look at the governments. Not even that much. There's a big shift in early 2024 from probably some seizures, and I believe this is when Trump officially came into office, and he said that all of their current held Bitcoin from previous seizures are going to go into the government treasury. So the governments have not been actively buying. The only two main buyers are the public companies and the ETFs. And these two have been steadily increasing. And not only steadily, but right around late 2023, it started to really accelerate. And that's highlighted in Fidelity's latest Bitcoin report right here. Changing the demand dynamics. Public companies holding 1,000 plus Bitcoin has been steadily increasing. And then until Q4 2023, it really started to increase by a big amount, both by a number of companies and by total number of coins held. And you also have public companies plus the exchange traded products. This really started to accelerate by Q4 2023. So from just over 4% of the total supply to, by the end of last year, just at 12%. And that's this exact same chart right here. You can see this dynamic track on chain. So that's the first argument Fidelity makes, is that the buyers of Bitcoin has changed. Well, you can argue that, hey, doesn't matter, there's still the cycles, whatever. But this is true. It used to be that there are not that many institutions buying Bitcoin. But over the last 3 years, there are a lot more institutions buying Bitcoin, specifically public companies and exchange traded products. That's true. That's real data. And then Fidelity says the volatility dynamics have changed. This is something that I said earlier, where Bitcoin is holding its price levels quite well, right around that low 60K mark. So here is what Fidelity has said. During each cycle, from the bear market price bottom until about the all-time high price, you would have a dynamic like this. So in the bear market, you have very low volatility in Bitcoin. You see they have ATL volatility, aka all-time low in volatility. That usually marks a very good time to be buying Bitcoin, right before Bitcoin really makes its big move towards the next bull market. And then as Bitcoin price increases, you have higher and higher all-time high price, followed by the eventual blow off top and then the bear market. So the problem of this cycle is that in January 2026, up here, Bitcoin recorded 17 new all-time lows in a 1-year realized volatility, just a few months after hitting an all-time high price of 126,000 in October 2025. What does this mean? This means the low volatility stages have been hit way faster than previous cycles. You see how from 2014, when Bitcoin reached its final, bull market top price around $1,000, it took a solid 2 years before price started to be not that volatile anymore and bottom out. That was early 2016. And then in the 2018 cycle, January 2018, Bitcoin topped right at 20K. And then the volatility didn't subdue until much later in late 2019. 2022 cycle similar. So the cycle top, you could argue it's late 2022. And then the all-time low volatility came in 2024. So throughout the entire bear market, Bitcoin has been very volatile. But this time around, in January, Bitcoin has already been much less volatile. So this is what Fidelity argues, that in all previous cycles, volatility spikes at the top, and then in the bear market, it just keeps being very choppy, very volatile. And then finally, after all of the collapse, the volatility gets low. But this bear market, you have a persistent low volatility. Talked about the demand dynamics already. And then here, the next point. The Bitcoin cycle, especially the bear market timing. Actually, no, this is the bull market timing. So comparing Bitcoin's past bull markets from 2013, January 2013 to December 2013, June 2016 to January 2018, August 2020 until November 2021, and then the recent one, February 2024 until October 2025. Here are the 4 cycles in 2013 cycle in blue, and then in purple for 2017, in green for 2021, and the last cycle in 2025 in orange. And they are using the MVRV ratio here, which is the market value to realized value ratio. So I have talked about this ratio last week. You can watch this video right here. If Bitcoin drops to this price, I'm buying heavily. I explained what the MVRV ratio is and how to use the Z-score. So effectively what this is a running realized price of Bitcoin based on all of the on-chain tracking of the current holders of the circulating Bitcoin. And since the last time that each Bitcoin has moved, what is the average price that everyone last spent in order to get their hands on the Bitcoin? The average realized price of Bitcoin. So when you take the current market value of Bitcoin divided by the realized value of Bitcoin, you have a ratio of how much on average each Bitcoin holder is in profit. And that's what the MVRV ratio is. In summary, by 2025, the 2025 cycle is more subdued in activity, which offers insight into how Bitcoin may be behaving differently as a larger, more liquid asset. If Bitcoin's market cap were to even reach 4 times the value of the realized cap of this cycle, it would imply a market cap of roughly $4.5 trillion. And Bitcoin should have reached something like 225K as of February 2026, but it didn't. We know that it only reached about 125K. So Fidelity uses this data to argue that Bitcoin is a larger, more liquid asset, which makes sense. It explains why the returns aren't as big, but also conversely, it should also translate on the downside, that the downside shouldn't be as big. Makes sense. Okay, and then they take this same type of analysis and they apply it to the Puell multiple. So the Puell multiple is another way of looking at the boom and bust cycles of Bitcoin and how much in profit or in loss people are on Bitcoin. Specifically, also putting into the calculation the annual issuance rate of Bitcoin. So you see here the 2013 to 2021, the last 3 cycles, Puell multiple has reached, well, in 2013, it reached way high at 10. And then in 2017, it reached 6. In 2021, it reached 3. And then in 2025, it pretty much stayed at 1. Now, the counter argument here is that because Puell multiple takes into account the annual issuance rate of Bitcoin, that naturally changes and gets more and more subdued as time goes on, because each halving divides the issuance rate of new Bitcoin by half. So this makes sense. This is less convincing than using the pure MVRV metric. But nonetheless, Fidelity argues that here, by incorporating Bitcoin's annual supply issuance, the Puell multiple provides an effective gauge as to whether significant price deviations have occurred within the past year. The metric has remained remarkably close to 1 throughout the current cycle. This means that the value of the daily issuance has not deviated much from the 365-day moving average, aka the volatility is decreasing. Okay. Finally, this is the point that is most interesting because this is a proprietary calculation that Fidelity uses, and that's called the profit to volatility ratio. So this is calculated by taking, I'm just gonna get the exact wording here. Profit to volatility is calculated as here. This metric calculates the percentage of Bitcoin addresses in profit divided by 1 year realized volatility, providing insight into the overall stability of the Bitcoin market over time. This is what Fidelity likes to look at, their own calculation. And a measurement above 0.01 can be considered very stable, low volatility, as achieving such a result requires both generally high profit and generally low volatility. So whenever you have this profit to volatility ratio above 0.01, that means people have a lot of profit and they don't have very high volatility. Conversely, when you have a measurement below 0.01, or if the measurement is decreasing, that means the asset is not that stable. You don't have as good of a return, but it's too volatile. So comparing the current cycle, 2025 cycle, to the last 3 cycles, you see that 2013, in the beginning, it was okay. When there are high profit, at least that was able to justify the high volatility. But in the bear market, the profit was not there anymore and the volatility was too high. That's why the profit to volatility ratio is low. And then same thing in 2021 and 2017, from the bull market top until the bear market, the profit to volatility ratio dropped. However, in the 2025 cycle, the profit to volatility ratio stayed right around 0.02. This is the metric that Fidelity uses to argue that Bitcoin's profit to volatility is good now. It has enough profit and it's able to hold that profit while not being as volatile as previous cycles. So if this cycle is indeed different as the data suggests, and a classic boom-bust pattern is not the likely outcome, it would be reasonable to anticipate that the chances of a prolonged bear market are lower as well. So there's really a lot of points here that they're trying to make. They're saying that Bitcoin is less volatile because we didn't have a blow-off top and because we have already reached a low volatility period while Bitcoin held right around that 60K mark for 1.5 months. So if it's able to hold here for a prolonged, few months, that means Bitcoin is more mature. We can hold on to a lot of that profit while there's low volatility. And if that is true, then Fidelity predicts that the chance of a prolonged bear market is lower. So that's another, here's another chart with the profit to volatility ratio overlaid on top of Bitcoin price. And you'll see how this corresponds to the past cycles. So you want the blue chart here to remain high for a good asset, which is highly profitable and lower volatility. And basically what they're trying to say is in the last 3 cycles, Bitcoin was only worth investing in during the bull market time. Right around 2013, it was good. But then the profit to volatility is not justifiable anymore. And then from 2016 until late 2017, it was a good investment, but then the profit to volatility came down again, so no longer good investment. And then late 2019 to early 2021 was good, but then 2022 was not good. And then this cycle, so far, Bitcoin has decent profit and not that high volatility. That's what this chart is saying. So in conclusion, what does Fidelity claim about Bitcoin? Fidelity claims that the traditional 4-year boom and bust cycle featuring blow-off tops and steep 80% drawdowns may be a thing of the past. As Bitcoin continues maturing because of all the different things to consider. Number one, institutional adoption. ETFs, ETPs and public companies are the biggest buyers of Bitcoin over the last 3 years. We didn't have a blow-off top, as we can see in the MVRV, market value compared to realized value. And we have reached a low volatility period just 3 months after the last all-time high. Fidelity argues that this is enough to say that Bitcoin is a different asset now compared to the last 3 cycles. It should be more mature. Yes, we are in a bear market, but we don't have as high volatility, and thus the bear market should be shorter, and we should not have something like a 80% drawdown. Steep 80% drawdown may be a thing of the past. So for investors, this emerging stability suggests that Bitcoin may now warrant consideration not just as a short-term tactical position, like here, where you want to be in Bitcoin in the bull market, but then get out of it in the bear market, be in the bull, but then get out at bear, be positioned in the bull, get out at the bear. But here, Fidelity is arguing that you don't want to do that anymore, and instead, you should be using it as a long-term portfolio component, which behaves more like a maturing macro asset. That's what Fidelity says, and that's what they have published in their digital asset report. So I don't know how heavily I should treat this. It's a big claim, to be honest. They are basically saying it's super cycle, and that yes, prices are low. Yes, we are in a bear market, but you should not be selling Bitcoin in the bear market anymore because it's not going to be as steep and it's going to be shorter. So back to our initial discussion and the thumbnail of this video. I'm not calling for the super cycle. It's actually not clickbait. Fidelity calls Bitcoin to be in a super cycle. Now, caveat here, this is Fidelity's digital asset branch, and this was published 10 days ago. Yesterday, Fidelity on their official website, this is the institutional arm, this is the second largest asset manager in the world, the full domain, fidelity.com, published this piece explaining the Bitcoin 4-year cycle. And basically they are, they're trying to cover their ass a little bit. And here's the key takeaway. This is a much shorter one, but it also covers the 4-year cycle. And they even have this chart up here, which is kind of crazy to think about. If you've been in crypto for long, you know that since 2017, this is all we have covered. And now this is on Fidelity's official website with these like green bull markets and then red bear markets. It's pretty nuts how far we've come. But here's what they have said. Bitcoin and the total crypto market cap have historically moved in cycles, usually around 4 years. And the bull market is around 3 years, the bear market is 1 year. This phenomenon is influenced by Bitcoin halvings, monetary policy, and investor psychology, which is putting it pretty simply. Investors should be cautious, however, about using these cycles as an investing strategy, as the 4-year time span is not precise and historical data is limited. So they want to call it a super cycle, but they also want to be defensive and say, hey guys, we're only saying this because we don't want you to just take the 4-year cycle and say, I want to sell Bitcoin in 2025 and then I buy Bitcoin by the end of 2026. Because they are unsure. They don't know if Bitcoin has already bottomed, essentially. And when you look at their summary here. Can investors use Bitcoin's four-year cycle as a strategy? Assuming the four-year cycles continue to play out, it may seem reasonable to build an investing strategy around their occurrence. However, investors may want to use them solely as one of the many reference points rather than a framework for specific strategies. Remember, cycles are not precisely 4 years long and have varied in length during each cycle. Instead, it may make more sense to use your knowledge of cycles as one of the many considerations for deciding when to take profit. For example, if the time is approaching that 4-year mark, you might choose to sell a portion of your holdings in case a bull market top is approaching. Wow, okay, so they're actually saying, hey guys, you should have sold early. Also keep in mind, there's no guarantee 4-year cycles will continue to play out as they have in the past. Those who believe in cycles, those who believe the cycles are over could eventually be right in a future bull or bear market. For example, crypto could get stuck in an extended bull or bear market that lasts longer than 4 years. This is the super cycle. As always, in light of uncertainties, make sure that they understand crypto is high risk. Yeah, so they're basically saying prices are already pretty cheap. And if you are using the 4-year cycle theory, it looks like you may want to sell now. But that's probably a bad idea. That's what they want to say as the defensive position on the Fidelity main research, while in their digital asset research, they're more bullish, and they just literally want to say, hey, guys, Bitcoin is pretty bullish. You don't want to sell. So just hold. They want to say, hey, just hold using all of the data that they have here. Just hold, this bear market is going to be shorter and it's going to be less volatile for people who subscribe to their digital asset research. While on the main Fidelity research, they want to say, hey, if you are in Bitcoin profit, you don't want to sell too late here because Bitcoin is already down a lot. So that's what they said. And this is fresh off the press from yesterday. Okay, now let's get into VanEck's argument. So this is less so of a research report, but actually a full interview from VanEck's CEO. And you guys can go watch this yourself. Just go on CNBC or look up VanEck's CEO, Jihan VanEck, and what he said on CNBC. So I'm going to play the quote that he said about halfway in. And let me make sure that you guys can hear this. Here we go.
In 2026, it's not that. It's the corporations, the financial companies, including the JPM for Wall Street in the future.
Coin that Ignite had a hard time getting the whole complex to rally until Circle's earnings, and how it was a stable coin that ignited so much excitement again. The plumbing of this does seem to be the most promising part. It just feels like a continued evolution in crypto.
Yeah, I think 2026, this is our VanEck thesis a little bit, is the year of the corporate chain wars. Now, I'll tell you what I mean by that. Blockchains are shortened to chain. And it used to be, okay, what am I going to use to be the transaction mechanism for Wall Street?
Okay, he's talking about, he talked a little bit about Ethereum, about Solana, about like these institutional chains.
JP Morgan chain or the Circle network.
Yeah, I just want to show you guys where he talked about the cycles.
Wild.
Agree with your point on stable coins. A good question would be, if stable coins are becoming so widely adopted, which they are, do we need Bitcoin? Does it have a purpose?
Well, that's why I said the whole ecosystem was rallying today, because...
But we're still down over 50% from our highs of last October.
Right. So, our view coming into 26 is that Bitcoin is governed by the two things you know about Bitcoin: limited supply at 21 million and the halvening cycle, where the Bitcoin miners who run the network get paid half the number of Bitcoin every 4 years. There's been an investing cycle. Bitcoin goes up 3 years in a row. goes down pretty massively in that fourth year. 2026 is that fourth year. So that's why we're in a Bitcoin bear market, excuse me. So I don't think we can I think we can overcomplicate it. Now, I think we're making a bottom, and this is a very nice sign of life. So, yeah.
There you go. So what did he say? Let's break it down. He said that there is, at VanEck, their thesis on Bitcoin is that what drives the Bitcoin? It's two things. It's the miners, and it's the 4-year halving event. So, sorry, it's the limited supply of 21 million, and it's the 4-year halving schedule and how the halving mechanics work with miners. So every 4 years, you guys know the story, new supply issuance gets cut in half, and miners gets paid less. Miners capitulate around the bear market year on the 4th year, and Bitcoin price finds a bottom, it rallies. And new miners comes in to replace the old miners who are less efficient. And that's the first thing he said. And then the second thing he said is that there is an investing cycle. Usually Bitcoin goes up 3 years, goes down 1 year, this is actually what Fidelity agrees with. And obviously, we see this, although we all argue, what's the real reason, but there is a 4-year cycle where 3 years up, 1 year down. And then, but the last thing he said is, I believe we are making a bottom here. He didn't really say why, but he literally just wanted to say Bitcoin bottomed. And he wanted to say that while the chart is up here, while the chart is red, and while the host says, hey, Bitcoin is down 50%, what do you think? Are you still a buyer? He wants to go public and say that, hey, you throw the chart in my face, Bitcoin is at 68K, I'm going to tell you we have bottomed. And this is going to look good on me, next year. I understand exactly why he wants to do this. And this is why I do these live streams as well. It's because Bitcoin is cheap. We want to look good. And we know as long as Bitcoin is going to come back, 68K is a joke for Bitcoin price. The more times you can go online and say that I'm a buyer at 68K for Bitcoin, the better you're going to look a year from now. That's my thesis. And it really looks like that's what he wants to do here. I don't think he has any real data to really say 68K right now is the bottom. There's a range. And even he says there's a full year of bear. But yeah, I mean, if you want to just follow exactly what he says, here's what he said. You can go ahead and trade that. You can buy Bitcoin now because VanEck's CEO said Bitcoin bottomed. But I don't think that's that constructive. So let's break down the first 2 points then. Number one, Bitcoin supply, 21 million. We all know, it's coming to the end pretty soon. New supply issuance is very low now. And number two, 4-year halving schedule. Out of all the funds, I haven't heard many who still believe so deeply in the mining part of the 4-year cycle being the main driver. So VanEck believes this. I don't know why. Largely because Bitcoin's early stage was bootstrap. Okay, new miners and new Bitcoin coming into circulation is still a big part of the current supply. But right now, most Bitcoin have been mined already. And even when new Bitcoin issuance is cut in half, it doesn't make a big difference because most of the supply is already circulating. So nonetheless, if we follow VanEck CEO, who is obviously a better investor than I am and way better investor than everybody else we know. So follow him, okay? And follow his train of thought. He says 3 years up, 1 year down. In the down year, Bitcoin price goes down, miners capitulate, and new miners come in, Bitcoin forms the bottom. Well, we are starting to see that. Why? You can point to the minor capitulation signs on chain already. And I covered this last week, 10 signs the bottom for Bitcoin is close. And sign number 10 was minor capitulation. So you see, there's a few ways you can look at it. You can look at the hash ribbons. So the hash ribbon is currently firing a buy signal, but it hasn't finished. So by the time it finishes, it means the minor capitulation is likely over. And when the hash ribbon signal crosses back up into green, that should be the end of the minor capitulation of this cycle as well. Because usually after the bull market top of Bitcoin price, right around this time period, right around that 200,000 blocks after the last time that the Bitcoin mining difficulty formed a bottom, we will have a new Bitcoin hash rate bottom and thus a Bitcoin difficulty bottom. AKA, a large amount of miners are leaving the mining business because they're forced out of business as Bitcoin price is too low in the bear market year, in the fourth year. And you can kind of see this chart, take this chart and map it to what VanEck has just said. It's driven by the 4-year halving cycle. You have 3 years up, which is these up years of 3 years where Bitcoin price goes up and Bitcoin mining hash rate goes up, and then the difficulty goes up. Okay, because more and more people are mining Bitcoin. More and more mining firms are there. But then in the bear market year, price comes down, price comes down, price comes down. As that bear market year is very brutal, mining hash rate drops, and then mining difficulty drops. And then at some point in the bear market year, the difficulty comes into a local low, which are these blue marks. At that local low, usually it corresponds to Bitcoin being at a very low price. It's somewhere like August 2022, if I'm getting it right here. Yeah, August 2022. I don't have that chart right now. August 2022 is right around here, and it will correlate to somewhere in the bear market here, and then somewhere in the bear market here. Right around these periods is when the local low for Bitcoin mining difficulty is for that cycle. And then as Bitcoin price starts to recover, Bitcoin hash rate also starts to increase, and Bitcoin mining difficulty don't make another low. It goes back up again. And that's what happened in the last 3 cycles. So he's basically saying we're pretty close to that point. Very soon, right around that 200,000 mark, Bitcoin mining difficulty should form a local low for this cycle, and that should mark the bottom of Bitcoin price as well. And that happens in the 4th year, the bear market year. And again, specifically, he says it's happening now. I don't know if it's happening now. I know it will happen sometime this year. That's my thesis. Because usually the bear market year has a range. And the range is from the cycle top until the cycle bottom. Most conservative time frame is about 1 year. So we have to look at least October to November of this year. And we are only at March right now. So it's a little bit too early to call it. But nonetheless, this is the way to look at the 4-year cycle based on halving and minor capitulation. Last thing I will say, some miners are seriously leaving the space as we speak. So every week you see new headlines. Bitdeer, they have sold all of their crypto. a huge Bitcoin miner, Bitdeer. Here's another one, Kango Mining. They sold $305 million of Bitcoin. It's pretty crazy. A lot of large miners, aside from some of the largest ones, they are truly capitulating as we speak. The biggest one that I've heard is kind of crazy. Jihan Wu, liquidate Bitcoin. I didn't think this. Yeah, this is Bitdeer. So if you guys don't know, Bitdeer is founded by Jihan Wu. Just Google this guy. You'll know exactly what I mean. He is the main. He is the longest running Bitcoin mining hardware entrepreneur. They are the world's largest computer chip company for Bitcoin mining. And yeah, Bitmain. You guys might know Bitmain, a very small company for Bitcoin mining ASICs. Bitmain. This is Jihan Wu's company, Antminer. These mining rigs, they are made by Bitmain, and Jihan Wu is the founder. And Bitdeer is their mining side. And Bitdeer itself is capitulating on Bitcoin mining. It's pretty nuts. I never thought this would happen, but it is. So if you are a believer in the 4-year cycle based on the miner capitulation theory, it doesn't get more capitulative than this. Like even the largest manufacturer of Bitcoin mining ASICs is capitulating. So there you go. Maybe that's a sign. Maybe that's why VanEck is calling the Bitcoin miner capitulation the Bitcoin bottom. So just something to think about. Okay, so that's it. That's Fidelity versus VanEck, the two firms' current belief on the Bitcoin 4-year cycle and where we are at. So just in summary, I want to give you a quick, side-by-side comparison. What do they agree on and disagree on? So Fidelity and VanEck both agree that Bitcoin is cheap, and they want to be buying. Now, Fidelity argues that Bitcoin is much more mature, and we don't have prolonged bear markets anymore. So the bear market, number one, is going to be shorter. Number two, it's going to be less volatile. So Bitcoin shouldn't drop 70 to 80% below the previous all-time high. Instead, around 50% drawdown is good, which is right around here. So you should be buying. And Fidelity argues the price should start to grind up soon. VanEck still believes we have 4-year cycles, but they also want to call the bottom. So they also say 68K for Bitcoin is cheap, and they want to be buying. So effectively on price, the two agree. They want to be buying Bitcoin at 68K. It's just the reason is different. So what drives the price? Fidelity says it's institutional demand from the ETFs, from public companies buying, and you can see that with lower volatility for the cycle, and thus it's time to be buying. VanEck CEO says minor capitulation is happening. So usually this happens in the 4th year in the halving cycle, and you see that the time matches. You see large mining firms capitulating, and thus they want to be buying. And they believe that price has bottomed. Now, what they disagree on is more like the future cycle. So VanEck still believes there's a 4-year cycle, which means 3 years up, 1 year down. So they believe this is still a bear market year, and this year at least will be somewhat choppy, and then we're going to have a bull market, and then we'll have a bear market. Fidelity basically is saying, hey, if you buy now, we don't know if there's going to be another 4-year boom and bust cycle. that part is the real, shocking part that they are even saying this. I wanted to believe this, and throughout 2025, it really seemed like it could be the case, but right on October 10th, market crashed, and we have been straight dumping into a bear market. So exactly what is the reason, I don't know, but it happened. And so we have to admit that yet again, Bitcoin topped right around the same time frame that it's supposed to top, from going from the bottom to the top. So now we have to take the same time frame from the top to the bottom, and just to be most conservative. But Fidelity doesn't agree. Fidelity thinks that the 4-year cycles are of the past, and we are going to have super cycles. So yeah, how do you use this information? Let's end with that. So number one, if you want to follow these institutions and you believe that their research is sound, then all you need to do is consider right now, are you a buyer or seller of Bitcoin? And the two firms agree. They are buying Bitcoin at 68K. And I think that's a really good approach. I'm buying Bitcoin at 68K. Now, the supercycle theory, and then the supercycle theory is pretty hard to convey and pretty hard to believe in right now. The absolute bear market bottom that the VanEck's CEO claims is also kind of random, to be honest, because we still have potentially 8 months to go until this bear market ends. So if you give Bitcoin 8 months of time, can it drop below 60K? There's a high probability. When you look at current Bitcoin price, it's not that far away from the 200-week SMA, and usually that gets touched in the bear market. So what I would do is just look at these two institutions and take the point that $68,000 for Bitcoin is cheap. Take that part of their approach, but don't go all in just because they are making the bold claim that, oh, Bitcoin cannot go down anymore throughout this year. There definitely can still be chop. And if you guys already know, number one, follow me on X at VirtualBacon0x. I'm actually posting just way more often now. You're going to find clips for these videos on there as well, just short form. You can consume a lot of them. I also have charts that are, condensation from our live streams. So those are pretty interesting. Those are only posted on X. Make sure to follow me there. And I will have trading alpha on there as well. And subscribe to the channel if you're not yet, because I am really trying to make live streams 5 days a week, keeping up with with what I believe, which is the best time to be doubling down, tripling down on crypto entrepreneurship, crypto investing, crypto content. And yeah, as you guys come back day after day, you're going to find more and more ways to be coping with this bear market, and then helping you guys stay in this industry while there is the least amount of competition. That's what my goal is right here. So if that sounds interesting to you, subscribe to the channel so you don't miss the next live stream. Okay, that's it. Thank you guys for watching, and I will see you on the next video and next live stream. Bye-bye.